Good day, everyone, and this is Patrick from EasyFX Code Trading System, and this is Saturday, the 8th of January, 2022. And this is the weekly technical analysis for the Euro, the cable, and the Aussie Dollar. And welcome back to my channel, and hope everyone had a good Happy New Year celebration and a safe and well-deserved break. I did not post any videos for the last couple of weeks, and because of the holiday weekends. And so this is the first video for the year. And just to recap on last week's highlights, it was a mixed bag for last week with some poor figures from the US ISM manufacturing and services. And then on Wednesday, the ADP employment figures was better than expected, almost double the jobs availability. But then on Friday, the non-farm payroll figures was worse than expected. And that boosted all the other pairs against the US dollar just yesterday. So let's begin with a fresh look for the year and the new month and this new week before we switch back to our previous setups where we left off a couple of weeks ago. So this is the daily chart on the Euro, and these are just the standard moving averages. The key ones that I use are the 55, that's in purple here, and the 200 EMAs. Those are the medium term and the longer term EMAs. The shorter term ones is not so critical. This is just a 10 SMA as a representative of representing the short term. You can actually just put any shorter time frame, 13 or 15 or 8. That's up to you. That strategy can still be successful even with whatever shorter term EMAs or simple moving averages that you use. But the key ones will be the 55, where you see that price respects the 200 and the 55 here, right? Rejected there and rejected here and rejected at the 55, and it gets weaker. Comes up to test the 55 again and still rejected. And now it's coming up to test the 55 again. So we'll see if there's going to be another rejection or whether it's finally going to break through. But even if it breaks through, it's still going to be pretty tough to get back up to the 200 EMA on a daily time frame, as this will be the next level of resistance. All right, so, and also for the last couple of weeks, in fact, this previous whole month of December has been just a consolidation period, and it looks like looks more like a bear flag, an extended bear flag, where it could drop at any time below this support. So we shall see whether it's able to break above the 55 in the medium term, or if it drops below this slightly bullish channel here, but more of a bear flag. Right. Let's just draw some of these. There's definitely a strong resistance up here. If it does break above the 55. At the moment now, there is a resistance, short-term or medium-term resistance up here, which aligns with the daily 55 EMA. And it seems to be forming a descending triangle here. Okay. So this immediate level at the 55 is at 113.87. So it needs to break above 114 before it can try to target the next level of resistance at the 115.13 area. So it's going to, if it clears this, it's able to push up to over 100, 110 pips, 120 pips. Right, so we'll see if that's doable. Otherwise, if it drops below 112.35 and then eventually at the 111.90 area, let's call it, and that's going to be further bearish move down. And if we take a look at the weekly time frame, let's go to the weekly time frame. And you see that's where it started from the middle of the year, last year, where the euro started to weaken, continued to weaken, and the ECB is still dovish, and the economy is not gaining any traction at the moment. So it's coming around to this swing low area. That's where it's going to find some strong support, hopefully. Otherwise, if it breaks down, then it's going to be a steep dive down. And further down, there is support at these levels here. See all these wicks. And that's well down to low of 107.80 area. So that's going to be a drastic fall. It does break down below 111.68. And this low is at 111.86. So yeah, so 111.90 area. Now, if we draw a Fibonacci continuation, bearish continuation move, then if it does, it's trying to hang on to stay above the 162 Fib extension, and if it does dip lower, then yes, it could try to target the 200 Fib extension at 110.60. That's on the weekly, on the longer term. Let's move back to the daily, and let's see what the shorter term for this week and for some intraday moves could bring. So if we can take this swing low here to this swing high, and it avoided reaching the 200 pip extension at 111.40 and trying to stay afloat above the 162 pip extension. So it's trying to break out higher above the daily 55 and also where the 138 pip extension is at 113.78 area. Okay, let's say 113.80. So anything above 114, that would be a trigger to go long and target this previous swing low. That's the 100 pip there at 115.25. Okay. All right, let's see if we can spot anything on the monthly time frame here. I do have the Ichimoku set up here. Let me just move it away. And also the weekly and monthly pivots. Let's move that aside for now. So this is the monthly time frame. And looks like on the monthly, it fell after almost reaching a double top formation. It fell all the way to this lows here, to these lows of this candle. So if it does break down lower, then yep, it's going for these lower wicks down here. And looking for support, so it's not out of the question that it could weaken further, but for now, it's just trying to pull back. It's possible that it could try to pull back to the swing low. But overall, on the monthly, it's still bearish. And these are the support levels that it's holding on to. All right. So let's move back to daily time frame again. Okay, so let's save this for next week. And follow up on this setup. Save this as the time. So let's return back to the previous chart that we left off a couple of weeks ago, where this was consolidating inside this box, and it's still well within this consolidation here. Is try to extend up further to right to where we mark the resistance zone. It's still there. So it didn't go very far over the last couple of weeks. And we can also change this fib impact the daily as well. Oops, I need to flip this over. Okay, so yes, so it's bouncing off the 162 fib extension right here. All right, and let's identify this resistance zone. For this coming week, if it's able to break above the 114 and the daily 55, then below that, let's take a look where we were. That's the swing low area. That's the support level. And 200 fib will be a critical support there then. All right, so let's mark this as a this support area here at the 200 fib. Okay. So this coming week, there are no major economic news. There are a number of US related news with CPI, but on Tuesday, there's the Fed chair testimony. And we'll see whether there's a follow through on last week, actually. Also, there was the release of the FOMC minutes, which was very hawkish, where they did discuss possible interest rate hikes for next year, this year actually, to possible 3 rate hikes, and also 3 next year as well. So it's sounded very hawkish. So we'll see if the US dollar can regain some momentum. And let's take a look at the US dollar index. And where we left off was consolidating within under this resistance level, could not reach the 200 fib extension of this swing move up. And on Friday, that's where it fell lower after the poor non-farm payroll figures, but it's still above this support level and holding on above 138 fib extension, where the daily 55 EMA is as well at 95.52. So now it's looking more like it's in a rectangle consolidation now. So it needs to hold above this support level. All right. Let's move on to the cable. And likewise, we'll start with this clean chart for the year, for the month, and for the week. And you can see that after finding support from lows of December, from the 131.69, or lowest was the 139.60. From this support area, managed to climb above these levels until it reached the 200 now, 200 EMA. Now we'll see if it's able to continue to grind its way up. It did manage quite well the second half of last month, and continued as well at the start of this year. And we'll see if it's able to continue higher to test this previous swing highs of October. And that's still another 200 over pips away at 138. So from these swing highs here in October to the swing low, it has climbed up to the 62 pip extension retracement already. So we'll see if it's able to continue another 240 pips away to test this swing highs. Let's take a look on the weekly time frame. And that was the swing down from this doji in October, mid-October. So it looks like last week's candle was a bullish push up to clear the weekly 55 EMA, which closely translated to the daily 200. And looks like it is possible, this is a daily again, and it is possible that it could grind its way back up to 786 retracement. And that's where this previous swing high was as well. So this is definitely a possible target. So you managed to break through this 50 pip retracement, and then this is the latest one at the 62 pip. But we'll see the direction first at the start of the new week, and to see whether it's able to, it could be a pullback before it continues higher. So 786 retracement is at 136.90 area, so that is possible. Okay, and this week there's only very minor news at the end of the week with the UK GDP on Friday. All right, so let's save this for next week, and this is another template as well. And let's compare that with where we left off last year. And it's climbing up to the 136, where last week there was the weekly R1 pivot level here at 136.98. So that's where it hit, and it did hit it earlier on Wednesday as well. So let's move this fib this is the level where we had Okay. So yeah, next week there's only this GDP news. And it has cleared well above the monthly pivot, which is at aligned with the 38 pip retracement. So let's see whether it's able to move further higher away from the monthly pivot. It has cleared this level here. And the monthly pivot did align with the previous swing low here in September. Okay. Oops, let's copy this one here. Oops. Okay, I'll do that later. Just want to grab this. Oh, there you go. And that's at the 137. Let's mark that round figure. Okay. Let's move on to the Aussie dollar then. And the Aussie dollar has already pulled back, retrace, and starting to turn back down. It's the daily chart here. Let's draw this swing move here. And it did climb up to test the 55th retracement level exactly, and then dip lower. But on Friday managed to climb back up because of the NFP. Okay. So let's see if this week there's any possible momentum shift again, to because it did try to cross over the daily 55 EMA but didn't close the gap to the daily 200 EMA. And this swing level here, it managed to clear that, then dip lower again. Let's take a look on the weekly time frame. And the weekly candle is bearish. That's not a good sign. So it's going to be a bit sluggish, trying to recover. And okay, right at this, if I flip this over and the retracement at 62 fib aligns with the weekly 55 EMA, and then there's a weekly 200 just below that. So it's going to find a lot of resistance, even if it tries to climb back up to the 73.40 level. And let's also take a look at the monthly. Let's move this away also. Okay. So right, there was a big swing move here from the early part of last year, and then that pulled back to the 38 fib retracement area. Before it found support around this swing. Let's change this color so that it's easier to see here. Okay, right at the 38 fib. And managed to find support down here at this level. At swing low there. Okay. All right, so let's save this for next week. And let's take a look at where we left off last year. And let's move this fib here to see the retracement. And right there at the 50 fib. Okay. And this week, there's only minor news on Tuesday with the Aussie retail sales figures. It stayed below the weekly pivot for last week and climbed back up to close right at the monthly pivot. It's at the 71.82. And there's also alignment with the weekly S2 pivot, 71.80, right here. I think we can remove some of these levels. So we can identify possible support here at the 71.00 round figure. But at the moment, it's facing resistance at the 50 fib. So unless it can break out higher, then it could try to test the 62 fib area. There is this swing structure here. All right, so nothing much has changed drastically over the last couple of weeks, but it has moved to some fib levels, and now let's see if it's going to be a bullish continuation or it's going to be stuck in this range until the following week and for the fundamental trigger. Otherwise, if it does try to push up higher, if the US dollar weakens, then yes, it could attempt to reach the 62 fib retracement. All right. Okay, so we'll see how the US dollar performs next week, and that's still driving a lot of the movement for the major pairs. Do check out my other videos on spot gold and dollar yen as well, where spot gold has some more significant moves than these forex pairs. And have a safe week and a good trading week, and cheers for now.